Hey everyone, this is Kirk here again at Option Alpha, and I wanted to do another video update. It seems the markets have really taken off here in the last couple of days, so I wanted to send this video update out, just give everyone my thoughts on the market, of course, and of course solicit your feedback, so you can obviously add your feedback to the comments below. I think that things are a little bit hairy right now. If you have been long since 2 weeks ago, I congratulate you for staying in there. I definitely would have gotten out much earlier than this and would have not taken full advantage of this. So if you are long, great, and just keep your stops tight. That's all I can say. I don't think that even at this point I wouldn't even consider getting in long, even though it seems like it's a sure thing. I just don't believe in these types of rallies. They seem to fade much faster than anyone thinks. I have a chart up here of the Russell, and I wanted to go over that first before I get into a couple other things tonight. And I think what's interesting is, like the title of the post says here, 9 out of 11 days higher for the Russell. Now, not all of the indexes have been as strong as the Russell. I know that the Dow has also come into contact with the most recent highs. The Russell has surpassed those yesterday, and then today again a little bit more of a gain on the Russell. I think it's just pretty interesting to see, though, that the same type of movement we're now starting to see with the Russell that we saw before. And again, you can see this slope line that I've already drawn here before, but we're also getting that same type of movement, this just kind of non-stop movement higher here on the Russell. And it seems like for the time being that's just going to continue forever. Just every day is a pretty much sure bet. But we know that 2 days can really knock this thing back down and really wipe out a bunch of gains. I think that even though the Russell kind of broke out of its highs, I'm not expecting the market to really kind of gain speed here unless we get really good jobs numbers on Friday. As far as the other indexes are concerned, you can see this is the Dow here. Again, the Dow is making trying to run up towards its most recent highs, but it hasn't quite gotten over that hump yet. Again, multiple days higher. It is down on the day here, but just by a little bit. 30 points, not a big deal on the Dow. I forgot to mention this on the Russell, but I'll mention it here on the Dow as well. But you can see here how overbought MACD is just recently, and it seems like it's been a complete reversal in this indicator from readings all the way down here, pretty much at the bottom of MACD, which kind of signaled a bottom here, and then all the way back up. Now we're nearing the highs again. So I think that as far as MACD is concerned, as far as most of the other major indicators that I look at, stochastics, RSI, which I've drawn here on this chart as well, all of them are getting back in towards this region of overboughtness, the market being too high. But as we all know, the market can continue in that state for a pretty long time. So we never know what's going to happen, right? But you just want to make sure that you take your positions very conservative at this point, because a quick move down in volatility is obviously going to hurt the market. Okay, now the one thing I did want to look at here tonight, and I wanted to take a good look at this, is the dollar. I know that the dollar, and I'm actually going to have to adjust the chart here and just move this up real quick. I know that the dollar has been really in the back of people's minds, but I don't think it's been a major chart that people are looking at. I think they should, because it really is a pretty major breakdown that we have seeing the dollar. We had a good rally from December all the way through June in the dollar. Pretty strong rally, and yet the markets rallied with it, which is kind of odd. Usually a weak dollar would suggest higher equities in general. So a strong dollar would suggest lower equities. But now, since about June of this past year, the dollar has really taken a beating and continues to take a beating. Well, it's now started to break down below this recent low here. You can see it just inched below that area back in March. Kind of regained it here at the end of March, and now it's just kind of come full circle and making a move lower. So I think that there's much more selling pressure in the dollar. Obviously, that could mean that the equities will continue to head higher and march higher. Of course, on inflation or anything else that you want to call it. I just think it's really another bubble starting to form. I don't think the markets are that healthy. I don't think the economy is that healthy either, but we all know that the market and the economy are two different things. The last thing I wanted to look at here tonight was oil prices. And I'm not sure if this has adjusted for today's change, but you can see that, and it hasn't here. So today oil prices were back up above 107. So I think that it's pretty safe to assume that we're going to be starting to head higher. 110 seems like it's right in the ballpark for oil prices. I think long term, I think the next stop for oil is going to be about the 120 region or 125 here, and that's where I have on my Fibonacci's. It's been pretty consistent with these Fibonacci's. You can see that back in January, December, it had a very tough time getting past this 50% retracement level, and then once it did get past this level, which you can see right here, it just had a huge jump higher and ran right to the next retracement level, where it's now starting to again have some more trouble. So if we can cleanly break out of this range, I think heading towards 120 seems like a no-brainer on these charts, which would obviously put a damper on any equity run that we start to see. So I think from my standpoint, as far as trading goes, I'm being very conservative. The trading alerts that we send out for members are conservative, to say the least. They're pretty far from the market. We just started building our May portfolio. Our April portfolio is complete and done. Good portfolio. Probably have some adjustment trades to do, but we just started doing our May portfolio. Very conservative. A lot of positions away from the market, just anticipating some more volatility as we kind of end March here and start April. As always, if you have any questions or comments, please email me, and happy trading.